Hey everybody, welcome to this episode of Finance This Property That. Welcome back, Rachel.
Hey,
Yeah,
thanks for having me back.
Yeah, well, you must have done something right the first time to have you back. But today I want to talk about, just expand on what we talked about last time around rooming houses. Rachel is an expert in rooming house property management, and we want to talk about, had a bit of a couple of cases recently around, you build a rooming house, what happens after you build it? Because what I've seen is most investors are spending 12 to 15 months getting the build right, and then they hand it to the wrong property manager, and that just basically undoes a lot of the work that this is done. Because if you don't know, rooming house valuations are treated very differently to residential. We want the best rent because it's done on a rental cap basis as well. So the lower the rent, probably the worse the outcome is going to be, and that actually falls over on the valuation, especially when people are trying to buy that property. It may not value up for what you think it is. So, want to talk about the management gap, how to protect yield, and then how the finance decisions actually affect the management outcome. And we're going to use a live example, which we actually both worked on recently and got a really good outcome for the clients. But we'll save that juicy bit to the end. So you got to stick around till the end. But thanks for coming in. I know there was a bit of a situation this morning.
There's a situation with a man-child husband and his jet ski, but moving forward.
He's back. He's back. Lots has changed, I think, since the last time we spoke.
Yeah, yep.
Especially in the rooming house space.
Lots of changes there has, yes.
Yeah. Do you, off the top of the head, do you want to cover off some of those changes?
Well, I think the last time we came in was before the end of last year.
Yeah, before the end of last year.
So obviously we had some changes come in with particularly Brisbane City Council, their approvals for these without having to get a DA. So obviously they've extended that for another 12 months.
Yay!
But then obviously clock is ticking. We're nearly in June. So that is nearly up again. And there are a lot of speculations around town that is not going to be extended further. So the race is on with a lot of clients and investors that we've been speaking with for whether that be the last 6 months or 2 years to really pull their finger out and do something. But obviously there's been changes with regards to things like green space and land size.
Yeah, it's some ridiculous, because we talked about car parking being one of the biggest issues last time.
And now the council have gone, we're going to give you less space to put car spaces, and we want a beautiful, established, well-maintained landscape garden instead.
Yes, but you're not solving the actual problem, which is, I love councils and their wise men that sit in the ivory tower.
It'd be great if we could sit on the panel. Maybe one day, but for now, we just be in the puppets.
I think what I heard through the grapevine is the minimum lot size is somewhere around that 400 square mark.
Correct, yes.
And then I think the percentage, again, this is probably speculation, but the percentage of green space is it 20 or 30%?
I thought it was 25. So
we're right
we might be
somewhere
between there, between 20 and 30. Yeah. Okay. Which is a significant shift.
Of the land size has got to be green space.
Yes.
Okay.
Yeah.
And have they given the definition of green space?
No, but, grass, gardens, mulched gardens, something that isn't actually concrete and places to park, essentially. So that's going to...
But they haven't addressed the issue of taking the cars off the road.
No, they've actually made that more of a problem, really. So, it is problematic and another challenge that we have to face. I think in conjunction with that, obviously... urban utilities have arrived. They've come to the party. And there's been some big changes in that space as well with regards to infrastructure charges. And we're specifically talking Brisbane here. So other councils, obviously that already exists through their councils. But with Brisbane, that's always been the case as to why it's so attractive to build in Brisbane is there are no infrastructure charges applicable. But that landscape is changing, and we have seen some examples of that actually being pursued and people having to cough up a little bit of money. When I say a little bit, it's
like Redland Bay style, where you're paying per room, or
no. So it's not council actually charging an infrastructure charge per suite or per dwelling. It's actually urban utilities. So the water infrastructure service provider. They're coming in for their clip of the ticket. And we've seen a couple of clients get charged with a pretty hefty fee, like around that $60,000 to $70,000. basically just to be honest with you, I couldn't even really tell you what
Have
it is.
water.
It's just the strain on their infrastructure system. I'm assuming that they say because there's 5, they like to determine them as individual dwellings, which they're not. We know they're not individual dwellings. They're rooms with inside one dwelling. But I think the argument is that there's, excess pressure on their infrastructure system, and so they're wanting to basically get their piece of the pie out of that.
So we have a housing crisis. We're trying to solve a housing crisis. But yet.
But also, I mean, look, I have a 5-bedroom home, and there are 6 people in my family. What's the difference between 5 individuals living under the one roof inside a rooming accommodation dwelling? Really, there's the same amount of coming out of those 2 dwellings, but because one is classed as what it is, 1B, again, it's just, every person wants their piece of the pie
slice of the pie, it's just greedy.
To a degree, yes. So those changes have been quite significant. I've found that there's a little bit of haste with people wanting to actually get rooming houses done and said and dusted, or at least underway and
approved and cracked on, right?
Yes.
What have they released, like an actual date or like a month?
No, well, I know it's in December because it's 12 months
that
from
was
the previous.
December was the last.
Yes, correct.
The last
I don't know the
review.
exact date, but it is in December.
Yeah.
So, I mean, look, they could extend it. No one really knows, to be honest, but there's a very real chance that they won't. And then obviously DA approvals are going to come into the equation there, which will make these significantly less attractive and less attainable for just, your average investor.
Yeah, and then you got the investors that already have them probably hold on to them more,
Yeah.
and they'll be scarce, and because scarcity drives prices up, in order to get in, you're
You are
probably going
hitting
to
the nail on the head. Yes, correct.
So again, but you're also providing houses. So again, I don't think there's a lot of thought process that's going into them. They think it's a money maker. Well, it is. Like, how else is
they're a high
investors-
yield asset, but at the same time, they're also serving a purpose. They are not just a high yield asset for no reason. We're providing accommodation, much needed accommodation, to actually a very big percentage of the market. Single person households, the percentage of single person households has increased substantially over the last 30 years. There was actually an article released on this about 4 or 5 months ago, which ran through some statistics, and it really just rings home to the fact that we do actually need this type of accommodation to cater to that market, because a single person doesn't need they don't even need a 2-bedroom unit, or they don't even need, like a 4-bedroom house. And the cost of those dwellings for them to rent per week is certainly, for the most part, out of their reach financially, or even if it is within their reach, they don't want to spend that because they don't need to.
And you gotta clean it.
Exactly. You got to do the gardens and
no, past that. But you just you touched on something just there. You've got these high yield assets, etc., that are going there. And you've got 5. You said, look, there's 5 bedrooms, 5 leases, etc. There's an absolute gap between the management currently, it's not the same as a residential property. You even said, the management on a residential property versus the management on one of these things is sometimes a bit, the people don't actually understand it.
It's actually substantially different.
So what do you, let's go through the differences, right? What's the gap that most investors don't actually understand when it comes to these, right? Forget the price.
The price is out of the equation here. We're talking about just the ins and outs of management and how it works and why it's different and what it looks like. So the biggest thing I say to them is essentially, you've got 5 individuals, but they're living under the one roof and they are sharing certain aspects of that property. So if I was just to pick any 5 randoms and say I'm approving you on your basis alone and your basis alone, your basis alone, and I've got 50-year-old Julie, I've got 20-year-old Duncan, and I've got 45-year-old Susie, and they all have various different work schedules. Some of them are night shift, some of them are not night shift. They're at different stages in their life. They've got different personalities. There could be a real clash, and a lot of tension if you're not actually getting the micro community and the harmony of the tenant mix right. So just that alone is we have to actually carefully select who's going into these properties. And then we have to manage all of those different personalities, all of those different schedules, as well as the common running of the whole property, managing all the things that you wouldn't normally have to manage with just a standard residential property. There's a lot more work that goes into that. When the internet goes down, that's 5 people's internet that's gone down. I've got Susie who works from home. I've got this person who works from hybrid. I've affected their livelihoods. It's really important to get that sort of stuff fixed ASAP. If I'm looking at a standard 4-bedroom house, I have nothing to do with their internet connection at all.
Yep.
They sort that out.
Yep.
Same with their electricity. Same with their water supply. Well, technically the owner still pays for it and charges just for the water usage. But the tenants control a lot of those sorts of things like utilities. They control a lot of the maintenance of the house and the gardening and those sorts of things. We're controlling that, and we're making sure that that's running optimally and efficiently, and that the owners actually, again, this is not really talking about rental price, but the operational expenses are being handled and managed effectively, and we're constantly reviewing them to make sure that they're getting the best possible deal, so that yield at the very end is still favourable.
Yeah, and I think the other big key aspect is, standard 4-bedroom house, obviously there's no house rules versus the rooming house has actually a set of house rules that they have to abide against and signed off on because, you are cohabitating with other people.
Correct, yes. Yeah. And I mean, like the RTA prescribes a very, very basic list of house rules that apply to rooming accommodation properties or co-living, but we have certainly extended and fleshed that out a lot because there are a lot of other rules that come into play to ensure that everyone's doing their part, contributing to the smooth running of the entire dwelling as a tenant.
So what are some of those like quirky rules that you've added?
Yep.
Or not like you, but like in your experience, you've had to amend the current one.
Yeah, well, probably a big one is laundry usage. So as you know, there's shared laundry there. Yep. I guess if you think about that laundry is going to be located closer to one unit than it is to other units at any one point in time. So if I have someone that's deciding they want to put a load of washing on at 1 a.m., if you live in your normal house and that's your own laundry, go for gold. Yeah. Like put your washing on at 1 a.m., I don't know. But if you're living in a rooming house, you're doing that, you're potentially disrupting a lot of other people during a time when they want to be resting. So we have very clear rules around actual usage times of the laundry, but not only that, the etiquette that we expect of tenants when they're using that laundry. So emptying out lint filters, making sure that washing's removed within an hour of the load finishing. If you can't adhere to that rule, don't put it on. Put it on when you can actually make sure you're there to hang it out. They're just a few basics of laundry etiquette.
And also, obviously, you've got to maintain, there's common areas that everyone has to pitch in and maintain as well.
Yep.
So you're not just looking after your own
Correct.
little
Yeah,
dwelling.
If they're using those common areas, which I will say hit and miss. Some properties, they get used heavily. Other properties, you would go in there after 2 years of construction and it looks brand new because no one's actually touched it or used it for its purpose.
Yeah.
But in saying that, yes, it's a self-cleaning area and they know that. So we have signage in all of our areas. Like if you're using this, clean up after yourself. Like wipe the bench down. If you've used the oven and you've dropped a bunch of crumbs in there or oil, wipe it out. Like yes, we get a professional cleaner that comes in to clean these areas on a regular basis, but they're there to make sure that the actual area itself is kept well maintained. Floors are swept and mopped and, staircases are kept in good condition. They do run like full tub cleans of the washing machines, but they're not there to clean up your personal mess. So yes, having them aware that they are liable to pitch in.
It's not a hotel.
It's not a hotel. No.
Yeah. Looks like one, but probably not. No, okay, cool. So that's, I think there's I wanted you to clear that up because, I've heard people like, they've got a really cheap management fee or they've got this. I'm like, yeah, but.
How well are they handling all those aspects?
Yeah,
and how much do they actually care about handling those aspects?
When we talk about, a live situation, we'll see about, who really cares versus who doesn't care. You talked also about reviewing pricing in relation to expenses, right?
Yes.
It's one way how you're protecting the yield without increasing risk, trying to de-risk it. So when do you do those cost-based reviews? And what are you actually reviewing?
A couple of different ways. Obviously, in 2 different scenarios here, if we're taking management over from somebody else and someone is coming into UpsideAV to have their property managed, particularly rooming, we do something called the Upside audit. It's just an asset audit of every part of their operational structure of the asset to ensure that everything's actually, one, compliant, like in terms of are they getting regular smoke alarm servicing? Are they also doing their fire safety in the common area because it is considered more like a commercial setup there. So they require more regular servicing than just your yearly annual. Have they reviewed their electricity tariffs in a while? We've just recently had a lot of retailers increase their tariffs substantially. And with rooming houses, with electricity providers, there's like single rate tariffs and then there's time of use tariffs. But with brand new rooming houses with the smart meters, you actually can't get a single use tariff, which is the desirable one, which is what you want. So you have to use time of use. And the tariffs between different retailers varies substantially. And I'm talking this could save people hundreds of dollars per year, if not more, on their electricity plan. So we review that. We go and run actual comparisons and give them real data in regards to this is what you're currently paying for your peak, off-peak, shoulder usage, your daily charge to the property. This is the plans that we would recommend with the retailers we know have great, tariff rates and you're going to save a lot of money. Things like their gardening and cleaning contractors, how often are they getting it done? What are they paying for those people to come through? We have our own providers that we use who are very competitively priced. In saying that, we're constantly reviewing prices with them too. We give them bulk amount of work. So for that, they obviously are able to give us like volume discounts so we can then pass that on to our clients as well. Same with insurance. So a good example is recently, obviously we encourage all of our clients to go through a broker and get specialised insurance, but Terry Shear do offer policies for this. And I always say people, it's a risk if you're going with them because obviously you're not filling out the same level of questionnaire as you are with these insurers that specialise. But every year with Terry Shear, they're factoring in X amount of percentage in growth of your property. And so your premiums, we just had one come through, the premiums had increased substantially for both the building and the landlord policies to the point where I looked at that and then I looked at the previous year where we had got a quote from the broker and it had exceeded the quote that we rejected or that the owner didn't want to proceed with from the broker service, which is obviously the option we would prefer to go with. I'm aware that theirs had probably also increased over that year, but that just prompted our team to go, look, let's go back to the brokers, let's renew an application and see what they come back with their underwriting quote and see if we can get you a better deal on the insurance because this has increased quite a bit and it is going to eat into your bottom line essentially. So we don't just blindly, and clients trust us to pay their bills for them, which they do for a lot of agencies, but we don't blindly process things. So we don't get a bill and go, yeah, it's electricity, put it through the system, go through our processes and make sure it gets paid. Like we're actually reviewing these things quite carefully. Electricity we do every 6 months. And then we review things like all of our gardening and cleaning contractors every quarter, so every 3 months. So we're pretty much all over it. It's not like there's huge gaps between when these people are having all of their operational expenses assessed.
Yeah, and I think, you touched on the point there of obviously the lower you can have your costs. Like people want to have a low cost, but we got to not stop thinking about the cost, think about the value that you're actually getting.
Yeah.
And you touched on insurance, right? One of the things that we look at with insurance, and I know George and Darren from We Cover You, very thorough. They're superb at what they do. And they go, yeah, you can go buy that cheap policy, but these are all the defects in that policy.
Correct. They basically do the comparison for you and go, there's your risk. You're literally opening yourself up to risk.
And I think one of the biggest ones we've seen is not disclosing that there's 5 leases and you're going to an insurance company that doesn't actually understand the product doesn't understand the asset that you're trying to insure. And then they're like, oh, but this is $1,000 more. It's like, yeah, but you're protecting a $1.5 million asset.
Correct. It's the biggest asset most people own. It's also, and this comes back to, I guess, the care factor of your managing agency. The builders aren't going to tell you about any of this stuff. That's not their job. Their job is not to make sure that you're set up correctly for structuring your property for maximum success and risk mitigation once it's completed. They've done their job. If you have an agent that doesn't really genuinely care about your success and your position as an investor of these properties, they may not even, if they ask you, have you got insurance in place? And you as the investor say, yes, I've got insurance in place. If they don't ask you, what type of insurance do you have in place? Can I see the certificate of currency? Can I assess whether you've got the right cover in place? If they don't actually know that, they're severely impacting your risk and essentially leaving you wide open to a huge amount of liability.
100%.
And I can confidently say that agencies that have those really low, cheap fees and they want to get you in the door and we're going to charge you just basically pennies to manage your property, they don't really care.
It's hard because, you know, you want to, and this is what I say, you know, from my point of view, when you're going to get finance done, free will cost you down the track.
Oh, yeah. Yes.
And it will cost you in finance and in property. It's not just going to cost you thousands of dollars. It could cost you hundreds of thousands to millions of dollars.
This applies in all areas of life. This is just making me think about the jet ski situation. I won't go into the details, but the jet ski that he had was not a brand new jet ski. And so I just think, like, you know, if there was a brand new jet ski that potentially was in better working condition, it lowers the risk. It was a life at risk there, right? So it applies to everything, really. Yeah.
But I think, if you're paying someone to do a service and you're not getting the advice that you need to make the best decision, then what are you paying them for?
Correct.
They're not doing their job. You touched base also on trying to make sure that you get the right people.
The right mix.
Right mix of people. Vacancy rates is one of the things that a lot of clients are concerned about. And in some places that aren't managed correctly, I've seen a lot of turnover in vacancy. Now, look, there are other things that are outside of not paying rent that you turn over, like in life off. Person has to actually now break lease to go
move to Melbourne for a work relocation.
Correct, right.
Happens all the time. It really does. Yeah.
So,
people have lives and things change.
Yeah, correct. So not talking about just vacancy in general. How do you manage that to protect the yield without increasing the risk? Like what's
the biggest thing is communication. Like that applies to absolutely everything, but more importantly to communication with your tenants. I think property managers get a bad rap from tenants because they have that, you know, view. And I think this is obviously because property managers have, you know, notoriously in the past created this sort of environment where they don't respond to maintenance or they don't get back to you in a timely manner or they respond to you a week later or, you know, they don't answer your phone calls, they don't return your phone calls. Like it's very common. We hear it all the time. We basically hear that and go, well, we're just going to be the opposite of that. Like that is basically our business model, is just to not be that, basically. So communicating with tenants early. So even though we can't predict like a break of lease, there's always certain indicators around it. So like a good example here would be we got a rental reference of one of our tenants. Instantly the property manager went, not moving out till September, I'm going to give him a ring straight on the phone. Hey, got this rental reference, just checking, is everything okay? Has something changed in your life? Are you looking to move out? Oh, actually, yeah, I'm going to have to break my lease. I've had a work relocation. No worries. When are you looking to move out? Oh, probably next month. Great. We're going to start advertising now. Are you okay with that? We're going to be going through for some inspections. Obviously, we'll only do the 2 per week. We want to mitigate your losses as well. We're working from both sides of the of the table here because it's going to not only benefit the tenant for us to do that, it's also going to benefit the landlord. So that is a prime example of how communication can seriously impact on how much time we have to ensure vacancy is at an absolute minimum. If we hadn't called that guy and just completed the reference and then he decided, oh, I'm going to give them the 7 days notice I need to give them for rooming to say I'm breaking my lease, and let's say I'm only in the last 3 months of my lease, I've only got to pay a week's rent of compensation. That's only 2 weeks that we have to find a replacement tenant in a pretty good market when things are going well. And obviously, you know, things go up and down throughout the year. We're not on a straight line. The more time that we have to secure someone, the better, but also not just because market impact, but we want to find the right tenant, and sometimes that doesn't happen in a week. We might get good applications, but there might be certain things that just don't sit right about that application that make that person not suitable for that type of property.
Yeah, and I think that's, you know, again, it's the quality versus just trying to just get someone in for the sake of
just fill it as quickly as possible. Like there's a big difference. You can fill it as quickly as possible to the wrong people, and then you've created yourself a huge problem for the next 12 months. Yeah,
because it'll cost you more money when you have to kick them out, and then you've got to do the marketing again. You pay the marketing fee, you pay the new whatever the fees that you have to pay, letting fee, all that stuff.
Because especially like if you're terminating someone for a reason, they've breached the agreement in some way, whether that be rent arrears or they're disturbing the peace significantly, like there's been some serious breach. If you're terminating them, like it's not like a break of lease. You don't get any compensation for that. Like the date that you kick them out, they only have to pay up to then. Break of lease, it's different. We do obviously have a little bit of leeway there where we're compensated, but it's not much. They're literally compensated only for loss of rent. It doesn't cover things like the letting fee or the advertising costs.
Yeah,
the owner wears those costs.
Yeah.
So, yeah, being able to mitigate the timeline in terms of it blowing out or us not knowing these things when we should, it comes down to communication.
Yeah. And I think, that's one of my clients said that he had like 4 people turn over.
Yeah.
And he goes, oh, I'm actually like heavily negative. I said, have you had a chat? It wasn't, you weren't.
Yeah.
Property manager. I'm like, so what's actually going on there? Is it the same room? He goes, yeah, it's the same room. I'm like, hang on a sec. Have you actually asked the question, are they vetting it or has it been really quick? He goes, oh no, they've just filled it really quickly. I'm like, mate, what?
I'll give you a really good example. We had a great applicant. Like everything looked really, really good on paper. Background check was clear. Excellent rental history. This not the most recent rental reference, but the one before that, they'd broken the lease. And when we spoke to that property manager, so that we're going back 2 tenancies here. We're not just getting the most recent one. Spoke to that property manager. There wasn't really a reason. We didn't actually ask what the reason was for them to break the lease. When we were negotiating with this tenant around like, if you're approved, can you give us the timeline as to when you want to move in? The property's available now. We want you to move in on this date. Is that doable for you? Is a 12-month term going to be favourable for you? She instantly started asking about what her obligations would be if she broke the lease. So she's already setting herself up to break the lease. I'm not saying that would happen, but like 99 times, if someone's asking that when they're trying to lease out a property.
And they've rented before.
Yes.
Yeah.
But not only that is she also asked what's the minimum lease term. So she was wanting it under 6 months. She's like, I don't know if 12 months, maybe 6 months. Is there a possibility to have it like a 4-month lease term, which we said, no, absolutely not. And then came the questions around if I break my lease. So she's already putting the wheels in motion to say, I'm probably going to break my lease. So for us, it's like, that's not the ideal tenant that we want to put in this property. That's going to cost our landlord extra money down the track when they do break their lease. We'd rather find someone who is, more committed to that 12-month term and actually does want to occupy that property long
genuinely
term.
wants to be there.
Yeah.
I mean, like I could get away with it because I've only just started like, oh, what's this? Because I haven't rented in like over.
Correct. But you can
15,
gauge that with people too. And I think that comes down to experience, is being able to talk to these people, looking at their rental history, basically piecing together that puzzle and going, this is something's not right about this, or we just know that this is not going to be the right applicant or the best applicant for your property.
Yeah, it's just asking that extra question in there as well. Because I think, in the more recent, and I hope this doesn't happen, but we just settled actually last week or the week before on a rooming house for one of my clients. Yeah,
Yes.
It's part 1 of a 4-part strategy. Part 2. So it's the first acquisition we've made. We went in under budget. I think I modelled 1.5 mil. We got it at 1.435, which I think is a good price. But my biggest concern, and I've obviously worked with this real estate agent before. He's worked with me, and the first thing he actually said to me was like, I'm getting Rachel to I'm like, oh, okay. And then immediately I've gone, something's a bit off. So that's why I was like, hey, can you just do this for me? Like I said, can you just get me the rentals here? Because online it was like 410. I'm like, that's a bit weird.
It was significantly less than what we were being told they were being rented out at.
Correct. Yeah.
Full context, we weren't actually involved in this.
No, you weren't. You weren't involved at all. We were just because the builder
sidelines.
Yeah, the builder already had someone in place, and it was being marketed at 410, let's call it, per week. And I'm sitting there going, these rooms, you said, no, mate, these rooms are like huge out the back. They should be done this. Then you got the car park and you got this, and like, it should be this. And they all got rented out, and they all got rented out under value, which causes, and the people don't realize that when you're purchasing at 1.435, the rent's got to stack at 1.435. For
the lender to go, yes, sure, you can have that money.
Or the valuer goes, yes, it meets the criteria. It's on cap rate, it meets this value. And I can tell you, it was not that. We
had this discussion going, this.
Because when they value it, they go rent times 52 minus the vacancy rate that they use. Some of them use 5%, some of them use 10%. I use 8%, so I'm somewhere in the middle. To be
P.S. It's way less than that.
Yeah,
way less than that.
It is, but we're going from a valuation point of view, which is more of a conservative point. Mm-hmm. And I could tell you it wasn't when I ran the cap. I'm like, holy mo! And I was on the phone to the agent going, mate, you got to get me appraisals. Like, what have you rented these ones out for? What did you sell these ones for in the same area? And I'm ringing you going, mate, this doesn't stack. Like, yours stacks and it makes sense. I can get it to work on your numbers, but how do we, luckily, you know, me knowing how to value a rooming house and having those connections in the valuation. And this is a new value. I'd never used her before. It's the first time. I immediately got on the phone to her and go, hey, my normal value I can't use, but I want to use you. Like, tell me how you value these things.
Yeah.
And I said, okay, these are now being rented out. Like, I've got leases and they're way under. Here's an appraisal. And she goes, yeah, that's like way under what you actually asked. She goes, just leave it with me. So anyway, long story short, my clients who were going to purchase that property have purchased it at a rental income would not have stacked up on the deal. Now they're stuck, right, for 12 months.
Correct. I think there's only one of them that's at 6.
Yeah.
But still stuck for 12 months.
But you can't change what I mean stuck by 12 months, guys, you can't change the lease, the rents for 12 months.
Yep.
Right? They're stuck at that. So even though the lease finishes at 6 months, they've got to continue
another
6 months as the minimum.
Yes.
So, but given the confidence that you had, like they've immediately, as soon as that thing's like, I know they've gone, sign me up. I'm like, you can't till you have the property.
We took it over on settlement. So on settlement day is when we came to effect. We had everything done on settlement.
So funny.
Yeah.
They were like, okay, you can't engage Rachel right now, but we can have conversations.
You don't own the property yet. When you own the property, you can.
Yeah, we can.
Yeah.
Because can we change it? I'm like, no, you can't, unfortunately. But we've got a solution.
Yes. We've got a plan in place. We know what we're doing. We know what we're aiming towards.
Yeah. But I think the biggest risk is like, you know, like I said at the beginning, you're spending 12 to 15 months.
Yeah.
You've handed it over to an agency that is just trying to get people in. Like clearly they're just trying to fill the rooms in.
Yeah. And we don't know. They could be really, really good tenants. And I've said this to the clients, like we obviously didn't have a hand in selecting these people, so I can't really make comment in regards to who they are, what their background is, what their financial stability is, you know, how they're going to cohesively rent that dwelling together and work together. But that's something that we'll be working really hard to try and understand and determine over the next probably month when we really get to know these people now that we've taken over.
Yeah.
And, you know, it was an interesting exercise taking it over. There was, again, this comes down to like the care factor, you know. We got given the entry condition reports for a brand new rooming house that has never been rented before with furniture, not a single photo. Not a single photo for any of the 5 units, a written report with no photos.
But isn't it a requirement to take a photo on an entry?
I mean, look, if I end up in QCAT for one of these tenancies, which I'll be quite honest with you, we stay away from QCAT and we have a very, very good record of not going, which I know there are agencies going, we're QCAT specialists. That's terrible. Don't advertise yourself like that.
So what's QCAT, sorry?
QCAT is where you go to resolve tenancy matters that you can't resolve between yourselves, like if there's rent arrears outstanding or damages to the property or it's basically like going to tribunal.
But why would you want to ever get to that stage?
You don't. So when there's agencies that advertise going, we're QCAT specialists, I'm like,
what? So you're crap at your job?
Yeah, don't be saying that.
You're basically saying that you don't communicate.
I'm going to add that to my website. Yeah. We have our percentage of the total number of managements that we've gone to QCAT for is 1. It actually is 1, and it was resolved before QCAT anyway. But if we were to go to QCAT for something and they ask for evidence, they want evidence. They want to see evidence, right? Like let's just say the bench top was damaged. They'd be like, what did it look like at the start of the tenancy? Well, I've got a comment that says it was in good condition and the tenant did agree to it, but I literally have no photographic evidence to show you. Like a judge is going to look at that and go, why? Why is there no photographic evidence? You've not actually done any due diligence here as an agency and you're letting your client down. So for us, that in itself was really, really disappointing to see. Like it's a brand new rooming house. We want to try and maintain that property to the best standard that we can for the whole life of that property. So taking photos for an entry report is just basically like basics 101. So again, it came down to care factor, I'm assuming. And yeah, obviously we met all the tenants. There's a few outstanding things that for a brand new rooming house, you know, we've literally resolved it within 3 days. Back to the builders, hey guys, defects here, here and here. Can you attend and fix it? Yep, sure, booked in, done, entry notice is sent, getting fixed tomorrow.
And the builders for that I know the builders that did it.
Yep.
They're actually rooming house specialists
They are,
as well.
and they're
they actually
extremely
know.
good with any of these defects type things. We have a 12-month defect warranty on these things. Let's use it.
Yep. And that property that they bought is cracking. Like it's a
great.
massive block of
Huge
land.
block. Everyone's got a great courtyard, which is really, really rare because a lot of times we are
and
squeezing.
car parks.
A car space for each tenant.
Yeah. Like, you know, and enough green space, I feel like
it is
for
actually.
that area as well. But, you know, price it that way.
Yes,
Like,
correct.
Just because
They need to understand what they're getting, right?
Yeah.
Like, you know,
you can go to Acacia Ridge and go on a shoebox and not get a car park, leave your car on the street, probably get stolen.
Yeah.
No, I shouldn't say that. Probably Acacia Ridge is actually a pretty good area.
It's
but
not too bad, yeah.
But, you know, you're adding more risk.
Yeah, correct.
So, yeah, like it does my head in because it actually, you know, when we were doing that valuation, like I said to Harry, I said, mate, you're going to have to prep your clients. Like if this doesn't come in, I'm not telling my clients to buy a property not worth it. I'm going to be telling them, hey, this is what the valuation came in at.
Yeah.
But yeah, I got told the valuation before it even, she goes, oh yeah, thanks. You did a really good job. Not all the other brokers actually take the extra step. I go, no, but I've done enough of these to know that I know where there's a deal.
Yeah.
I know where I'm like.
That was a deal. There was just a little hiccup in the way.
Yeah, exactly. Exactly. And I, you know, I know that they wanted to sell that property for about a bit higher than what I said.
Yeah.
No, mate, here's the numbers. This is what we do. And like
it's commercially valued, right?
Yeah.
Numbers don't lie. You don't get emotionally attached to these things and, you know, start getting silly over your offers because the view's good.
Or you get a car park.
Yeah.
But I think the important part is the clients were protected and the clients are now in the best hands possible from, you know, the purchase, the valuation, the finance, now moving forward the property management. For them, they're a young family wanting to grow their wealth and we've done part one. And excitingly enough, we actually have just secured, hopefully, fingers crossed, we've secured their second property.
Oh, awesome.
Which is a different strategy altogether. Yeah. So we've got a yield play and now we've got a one in their personal name where they'll add a secondary dwelling out the back and a bit like what I've done at Crestmead.
Yeah.
And that, but that's, you know, that's a bit of more of a long-term play just because of the way prices are, like, you know, they got in on a really good suburb, good deal. But, you know, we've had 2 rate rises. There's a bit of uncertainty happening with the budget. You know, by the time we filter this episode out, budget's probably already happened.
Yep.
But I said, you know, you just get in on the property. You have to get in. You can't not get in. Get the reno done, artificially increase the rent.
Yeah.
Then sit on it. Let time do its thing and then we've got better
time. That's it. Time. I think it's underestimated severely.
Yeah. And I guess with the finance decisions as well, right, you need to have the right people. Because, like, I don't think that would have survived. They're not getting the best outcome. Like, we can deal with it for a year. I just don't think if that was the same agency, I feel in year 2, year 3, year 4, year 5,
we wouldn't have got to that stage.
We won't. You know what I mean? Like, it just doesn't make sense. And it's in my head, I'm going, you just need to surround, and I'm so glad that they're surrounding themselves with the right team.
Yeah, 100%. Yeah. And look, it's been great taking, you know, we've identified, again, OPEX things coming into that as well. We've been able to, you know, hook them up with a electricity provider from day one that we know have great tariffs. And I'm like, look, you know, you're not locked into these people. You don't have to be loyal to an electricity provider. If their tariffs go up, let's just go and shop around again. Let's find another. Someone might be having a deal for 12 months. After 12 months, they will take you back to terrible tariffs, in which case we will just review again.
And go
and
again.
we'll just switch around to whoever's giving us the best deal.
Like refinancing
refinancing for electricity. But
yes.
electricity's horrible. Like, it's honestly gone through the roof. And even with solar, like some of these companies even are giving such terrible feed-in tariffs for solar rebates.
It's nil. It's almost
nothing.
negligible.
Yeah, it's honestly, So
just be careful with where every time you do a utilities
they do a credit
check,
search.
they hit the credit file.
Correct.
And it actually lowers I'm like, come on, guys.
Yes. So in saying that, it's not like the aim is not always to switch retailers. And I say that just because it sounds like, oh, you know, we're going to get the best deal. You want to go back to your retailer and try and negotiate.
Yes.
Hey, I'm looking at, this company, they're giving these really good tariffs. I've been with you guys for this. What can you do for me? You might not get the same deal as what these guys are
close
offering,
enough.
but like you said, you got to be really mindful of the credit search that's going on.
Yeah.
Yeah.
And I think, you guys are very good at asking the extra question, especially if they're trying to do this like, planning on doing any more finance this year?
Yeah, you need to be mindful about what you're doing in the background with these things.
And this is stuff that people don't tell you.
No, they don't.
Like,
but some people don't even know. Do you know what I mean? Like some people actually don't even know that even has a credit search attached to it by just changing electricity providers. Like
they probably don't even see it. Like you don't do a credit check on a client to say whether they're credit worthy and see their credit file. To do a
I mean, we do it something to a certain degree, but not that far.
No, you wouldn't be able to see I see
we can't see.
in
No.
finance. Yeah.
Correct.
So I see everything. Like I want to know
Can't hide
everything.
from me.
Yeah, I want to know everything because the score, you need 3 things for finance. Income, cash or equity, and a good credit file. Mm-hmm. Those are the 3 foundations, and that surrounds the foundation is the team.
Yep.
Of people that don't say yes. They're going to challenge the way you think because ultimately
they're going to ask more questions. They're going to dig deeper.
Yeah. Why are we doing this? What's going on? No. People that can say no. What other financial decisions do you reckon that could affect, like that management helps affect, some of these outcomes? What do you see in your...
Say again.
Like the management, like, finance decisions, bit of cost, like spending where you need to.
Yep.
You'll have probably a lot of people on your in your portfolio that have bloody never reviewed their rooming house loan.
Yeah.
So
correct.
How do you
I know what you mean.
Yeah.
Yes.
How do you approach that conversation with your clients?
Well, it's just essentially exactly like what you said before. Are you looking to do anything more with your portfolio? Are you growing in regards to investing in property? Have you got any future goals? I don't delve too much into, their personal financial situation, but that's when we're connecting with people like you to be like, maybe you need to go and have a chat with this person. Even if you've got something on the radar for the next 2-3 years. We had a client recently and he was looking to, and this is kind of on ice, so it may be one that I'll introduce to you or maybe I already have. He was considering selling his rooming house because he was trying to fund a PPR down in Victoria. They were like, we've got as far as we can with squeezing operational expenses, and we think that so again we were introduced to these clients late in the game and they bought this property in their personal names.
Hey.
Yeah. Oopsie. So again, there's a lot of hurt going on because of that.
Yeah.
And that's said and done now, but they're looking to try and expand things in their own PPR world, but also in their investment world. And they thought that selling the rooming house might have been the best option.
I don't think I've come across that client, but they desperately need a strategy for finance and property.
Correct. Yes.
Because literally once they sell that, they've got to start again.
Yeah, exactly. So, and we kind of had that chat around like, well, what's the reason for you wanting to sell it? Like, is there something that we can help with or bring clarity to? And then it was like, look, we're trying to fund this other deal, and at the moment we're just finding that something's not quite working with regards to what we thought we'd get out of this property versus what we are getting out of it. And again, situation for them getting into that property was they were kind of sold into that from the spruiker world, and they were sold on a pot of gold at the end of the rainbow. But that obviously that whole process to get them there, they weren't actually connected with the right people, like a Dion, to structure them properly to actually get as close as possible to that pot of gold.
Yeah. And I think it's because, even though they think they had the right broker, that broker is very transactional.
Yes, and they didn't understand this asset either. So
that's hard.
Yeah.
Yeah. They would have got the loan.
Yeah.
And I think one of my ads literally just says that. Yeah, great. You've actually, it's really good that you've got your rooming house approved, but you've actually stuffed yourself up for the your next 2 purchases because you haven't structured it correctly. And that's where speaking to the right property manager, speaking to the right insurance person, right buyer's agent, right
and
accountant.
Not just settling on the first person. Like and like you might hear something and be like, okay, I don't really know much about this, so I'm going to go and get advice elsewhere. Like you said, chatting to the right people who do understand it as well and understand this asset, understand this space, understand how important that actual structure is from the very beginning in regards to the future success of not only that property but any future portfolio additions that they make. It's crucial.
Especially if you want to build these things.
Yes.
Because you can't get it wrong after, like it's too late.
Yeah.
And,
Miss the
building.
boat.
Yeah. Mate, like it baffles me how many people just think they can just do one of these without a plan. And I just refuse to do it. I'm like, oh, sorry.
You need, yeah.
Yeah. I'm like,
There needs to be more thought going into it than just like it's the next shiny thing.
Yeah.
And I've heard that, I can make X amount of dollars out of this. Yes, there's some truth in that, but the way that you are set up to achieve that is very, very important. It's not just that you go out on a whim and I'm going to decide to do this tomorrow.
It's the same as the clients that we've just helped.
Yeah,
They literally came to me about, I want a rooming house. I'm like,
hang on a minute, let's go backwards
hang on,
from
what
there.
are you?
I think we talked about that, working backwards, just always starting from that exit
what
strategy
do you
or
want
what
to do?
you want.
Yeah, what do you actually want? Oh, we want to build a property. Okay. But what do you want? Why? What's the motive? Okay, why do you want to do that? Okay. What do you know about rooming house? Oh, it's just like really high
are you a
yield.
therapist as well?
Oh,
you
basically.
keep digging.
yeah. But when we got down to it, I go, we can get you a rooming house.
Yeah.
But the idea of rooming house is to actually get it as positively cash flowed as possible. Just jumping into a rooming house without structure and strategy will stop you
From doing that.
from doing that.
Yeah.
How about we look at your current situation, which they had 2 properties, and build your portfolio out from there. And mate, like I'll tell you, the stuff that we did for them that saved them like $2 and a bit grand on their owner occupied, recycled some debt, had the war chest, planned the next purchase, and sequencing really mattered.
Yep.
Hook them up with the right people for their rooming house like yourself that we know that's going to protect the asset.
Yeah.
And then also I think they saw George and Darren from We Cover You as well.
Yes, correct, because we've got their certificate of currency. They went with this.
Great.
I'm not going to say who they went with. They
No.
Yeah, they went with a good insurer who we know they're covered adequately.
Yeah,
Yep,
adequately.
properly.
They may not be the cheapest or the most
It's not
expensive.
though. Insurance is not,
but
it's
the
your
protection.
biggest asset. It is worth a lot of money. Would you go and buy I don't know what sort of car because I'm not into it, but a really expensive car, and get like the cheapest possible insurance? No, you would not, because then if something happens, like you're staffed.
Yeah.
Same with insurance for your house. So yes,
100%.
they are set up well. Yeah.
With now this next purchase, we already know that we literally just reduce a lever here, increase the lever here, and now we've got tax deductibility.
Yeah.
But we already know the rooming house is looking after itself because the way we've structured it for their accountant to then write a letter going, yes, I know that this is looking after itself. Here's the numbers. We can prove it.
I think coming back to that too, because I know how you were saying like, well, what's, the biggest difference with, managing a standard resi and managing these properties is actually knowing how so many different aspects of owning that property impact that owner and not only their current financial situation, but their future financial situation. So there are a lot of, property managers that they consider themselves like rent collectors and just deal with maintenance. And then that's kind of where the buck stops. There's no real genuine care factor. They can't actually put on an owner hat and go, yep, this is what this decision would mean for you as a property owner and your investment journey. I think too, for us, it's so important for our business because we obviously are investors ourselves, my husband and I. We own rooming houses as well. Like I get it. I fully get it. I'm in those shoes anyway as it is. So I can relate, but I can also give you, my experience as to how I would do things and the people that I would want to connect with to ensure that that's the most profitable but beneficial strategy.
Yeah, and also it's people's pretty much their nest egg, some of them, isn't it?
It's their livelihood as well. Yeah, correct.
So, and I was just about to say, you have room or have had experience in having rooming houses in your portfolio, have rooming houses in your portfolio, and
still do,
continue to expand that. But you understand deeply
We've just been
how
through
to
the
do
valuation process too.
Yeah.
We actually considered selling ours this year because we were like looking at where the market's going and we were like, is that the right decision? We decided not to. We decided to go down the valuation route anyway. And again, working with valuers day in, day out here. So I know a lot of people and I know who understands this space. So it can be strategic around, to a degree, obviously. We've got lenders pulling the strings up there. But we got a fantastic outcome. For us, it was extremely favourable. It was exactly what we were hoping to achieve out of it. Yeah. And we've essentially geared ourselves up for the next few years.
Yeah, and you've got the asset. You've actually realised the value in the asset.
100%. That's it. The cash is a bit of a bonus.
Yeah.
I understand for some people it's not, and the cash flow is like the main reason that they want to invest in these just because of that yield. But that's essentially not, for us, that's not what's most important.
Because you're in a different phase in your property journey, right? So you're either in your accumulation and aggressive growth, or you're in your consolidation phase. When you once you're after your consolidation, you're going into your sort of like that evolution phase, like, well, what the hell do I do next? Or can I gear up to do next? Because time's done its thing in your consolidation phase, and which is what that valuation's literally given you.
It's given us that.
Oh, geez, we weren't really sure. And now it's like, oh, actually, right.
Like we had a pretty good idea. We knew what we had a pretty good idea on what they'd come back at. We kind of preempted that a little bit beforehand with some valuers to be like, here's the figures. Like, you guys know, we've seen your vals come out. What do you reckon? Should we pull the lever on this? And then we did. And yeah, it's worked very favorable for us. But like just having that knowledge about how things work and, you know, obviously not giving advice to people, but just connecting them with the right people to give them that advice, because you know, we do our job really well as property managers, and that allows us to obviously expand the network of people who will also do their job really well and benefit that client. There is a whole ecosystem of people that essentially help these investors to succeed in the long term. It's like we're like one piece of that puzzle essentially. And
you all work together.
Well, yeah, there's no point. Why would you not? Like,
it's easy because, you know, and I think the one thing that I really love about the relationships I have with people like yourselves, Darren and George, Morgan, Troy, and even Chris and all my buyer's agents is that, mate, we work completely independently of each other, but we work together.
Yeah.
You give advice on what you're good at. I give advice on what we're good at. We have to, if there's crossover, we talk.
Yep.
And the biggest thing is, I don't pay you and you don't pay me, because that's the only way we can make it independent and unbiased.
Yeah.
That's my honest opinion. And anyone that says, oh, I'll pay you, I'll be like, oh, how much do you charge? Or how much do you pay? I'm like, mate, I don't want to do business with you. Yeah. Like, it's not how I work.
We're trying to achieve an outcome for somebody. And like, we're all going to win out of that situation at some point or another. We all have businesses and that's fine. But like at the end of the day, like the main goal should be to have that person succeeding in what it is that they're wanting to succeed in.
Yep.
And we're all here to deliver a service and an outcome for them to get there.
And I think the key thing is, you know, when you're talking about advice, good advice is never free, right? Bad advice, like advice, if it's free, like I said at the beginning, free advice will actually cost you more in the long run, right? So, mate, thanks for jumping in.
Loved it. Thank you.
I know it's been a long time.
You invited me back in.
No, it's been good, because I think this is one of the, you know, like I said at the beginning, you know, you're getting a lot of people that are building these things. You spend 12 to 18 months building these things. They're beautiful. You know, you got the build right.
And it can be very stressful, that process, going through the build, getting the plans right, going through council for all the approvals and
the build itself, like, oh my God, like all these rain delays
holding
and things.
costs, like it's, you know.
So the last thing you want is to hand it to the wrong property manager, and that undoes, you know, your holding costs and all that cost to get in because you haven't received any rent yet. Feels like this massive storm cloud, and then it goes, oh, I've got to sell this property now.
Yeah.
I don't think I've made money. And then this is where the patience piece comes into it. But I think, you know, I know that I've got a very good network in Rooming House and also outside of Rooming House for all walks of life and all the different expertise. So thank you again for sharing some of your knowledge.
Thank you.
And also about some of the changes. If people want to get a hold of you, how do they get you?
Email, phone. Are you going to put my email up, or do you want me
just say
okay, so it's Rachel, Rachel, at UpsideAV.com.au. Mobile is the best way to get me, 0403 313 596. Instagram, we're UpsideAV, very easy to find us. LinkedIn, I'm just under Rachel Gibb. We have a connection with our Facebook page, but I'm obviously the face, so you can find everything in regards to us and all our content there. And happy to help anyone who wants to reach out and have a chat, even if you're just exploring.
Yeah,
so.
Exactly. I think it starts with a conversation.
Absolutely.
Look, thanks everyone for joining us today. As always, the information on this podcast is very general in nature. Doesn't take into consideration your personal circumstances. If you want to talk property management, especially around rooming houses, Rachel, you know where to find her and all the socials, and she's just given you her email address and mobile. If you need to talk about finance, come and chat with me at Dion Finance Specialist on Instagram and LinkedIn, Dion Fernandez. But until the next episode, thank you for listening.